Hello everyone and welcome back to another video on my Howard Trade ICT's concept series. In the last video we talked about the premium discount or PD arrays. We talked about fair value gaps, Abisi and Asibi. We talked about inversion fair value gaps. We talked about the change state of delivery, order blocks, breaker blocks. We talked about volume imbalances, liquidity voids, consequent encroachment or mean threshold, and then we also talked about the PD array matrix. Now that you have a decent understanding of what the PD arrays are, what they look like, and how you can interpret them to read price and how price is booked through algorithmic delivery, we're going to talk about top-down analysis and how that plays into your trades and how you read price. We're going to talk about why it matters. We're going to go over the weekly chart, daily chart, 4-hour chart, 1-hour chart. We're going to talk about time frame alignment, the 20, 40, and 60-day IPDA look back, and then we're going to go into if-then, if-when statements. So why does top-down analysis matter? Top-down analysis matters because PD arrays and how you use them to trade, it is universal across different assets, different financial instruments. It doesn't matter if you're trading indices, stocks or equities, commodities, metals, crypto, Forex. It works on every single one of those and whatever else, right? Bonds as well, the dollar, currencies. But the main point of why it matters is because the higher time frame will dictate what the lower time frame does. For example, we talked about the fair value gaps. So you should already know how they look, how you should interpret them to read price and anticipate where price is going to go next. However, if you were looking at two different fair value gaps, let's say one on the daily, and then let's say you had another one drawn on the 1-hour chart, whatever you have on the daily is going to take precedence because that is the higher time frame. The daily chart is higher than a 1-hour chart. To show you what I mean by the higher time frames take precedence and how they are superior to the lower time frames, I want you to look at this daily chart. And you'll see that I marked out the daily buy-side imbalance, sell-side inefficiency here. I also marked out this daily buy-side imbalance, sell-side inefficiency here. I also have a daily volume imbalance right here. I have short-term sell-side, which I marked because that I was honestly anticipating this sell-side to get taken earlier this week, but we ended up going higher. And then I also have a daily SIBI right here, just a little tiny one. And then I have this 1, 50%, and then 0 because I'm marking out this bearish daily order block. And I kind of just projected it over to the right a little bit to show you how price is going to act according to these levels, all of these daily levels on the lower time frame. This is a daily BISI. I was anticipating price earlier this week to come up to here. Possibly test up to here and then come down and take out this short-term sell-side liquidity here. So I was anticipating just a kind of like a daily wick up to the top and then back down. But as you can see, NQ kind of went above where I was thinking it was going to wick, and it kind of used it as support right here. On top of that, daily sell-side imbalance, buy-side inefficiency. So the same SIBI that I thought was going to keep price down, we actually went above it, came back on top of it, and then we used that to go higher. However, if you look at what I drew on the daily chart, which is that bearish order block, you can see that we have the 1, 50% and 0 here. And then you could see how price reacted to that. If you recall, the function of an order block, price can go up into it, in this case, a bearish order block, right? Price can come up into it, but you would prefer that price stays underneath the halfway point or the mean threshold, which is delineated by this 0.50 here. Now, it looks like we went above it and closed above it on the hourly, but if you look at it on the daily chart, you'll see that price went up. So we did touch into it. Price did go above the halfway point, but the candlestick didn't even close inside of that order block. All right, so there's your daily order block with a rectangle instead of the lines. But yeah, if you see, Price did go up outside the top of it even, but then price came right back down. It does look bearish. And then if you go to the 1 hour chart, you'll see that price did go up and then came right back down. The candlesticks also didn't close outside the top of it. So that in itself is bearish. You can highlight this 1 hour fair value gap in the form of a BISI. So that's a 1 hour BISI. Normally, if let's just say the daily wasn't here, right? The daily bearish order block wasn't here. And then we have all-time high literally right here at 29,782. If there was no bearish order block here or any higher time frame PD array above the hourly, that would give me skepticism on this price continuing going higher. You would think that this 1 hour buy side imbalance, sell side inefficiency would help to keep price up, right? So we have low, high, lower low, higher high, and then we have a fair value gap that was created on this move higher. So you would think that price would come down and then continue up and take out the all-time high liquidity, right? This is what I mean by higher time frame will take precedence. So even though there is a 1 hour buy side imbalance, sell side inefficiency here, because we are trading up into a daily bearish order block, I would not trust this 1 hour fair value gap to hold and keep price up to then continue the move up. I would look for something in this area to short. And if you go to my X, I actually did short this low all the way down, because if you take this range here, this is your dealing range. So this is a prime example of a good premium to discount trade, because price is going up, but we are trading into that daily bearish order block. And we also took out short-term buy-side liquidity. So this short-term buy-side liquidity here was ran on this wick coming up, which is that high that I marked out. So we have short-term buy-side liquidity. We have trading into a bearish order block on the daily. And then we have candlesticks not closing outside the top of it with long wicks up top. The next move that is more probable to go into our favor would be a short. And then we also have the premium to discount. So there's our range. Anything below the halfway point is discount. Anything above the halfway point is premium. So that is a perfect short down. And it didn't come down here, which is where I thought it would go before the end of the close, but we'll probably get that Sunday opening at 6 o'clock p.m. But that is what I mean by the higher time frame takes precedence. Whenever you have analysis on multiple time frames that is conflicting with each other, let's say one is saying that it's bullish, the other one is saying it's bearish, or let's say you have multiple that say it's bearish and then there's multiple that say it's bullish, I would prioritize the analysis on the higher time frames. Okay, so hopefully that makes sense to you. Now we're going to transition over to a weekly chart, and then I'm going to show you exactly what I do as far as my analysis goes. I usually do it on the weekend, usually around Sunday. That way I have my levels heading into the Sunday open, and then I'm ready to rock and roll on Monday. And then as we trade throughout the week, I adjust it if things need to be adjusted, or I'll add things. But same process with the PD array video. Right? Kind of just go through, mark them out, the most obvious stuff. So this is a weekly BISI. The weekly, I'm going to be completely honest, I don't really focus on much, because the way that I trade, I'm really just more concerned with the intraday moves. So sometimes I do chart up the weekly, but not all the time. And if I do, sometimes I just leave like maybe the basic stuff, right? So I'll leave like the closest one at least to where current price is. So the closest PD array to where we are in price currently is just this weekly BISI, right? And then we have all-time high. Don't think I have a thing for that, so I'm gonna have to add it. But yeah, this is all-time high right here. Current price is here at 29,523.50. The closest PD array or liquidity level that we have above us is all-time high, and then the closest PD array or liquidity that we have below us is this weekly BISI. You could do the wicks sort of like how I did with the daily bearish order block, but this is kind of getting a little bit more advanced and I'm not gonna cover that in this video. But yep, you could highlight the wicks as well because that in itself is a key level, especially on the higher time frame. I wouldn't really focus on fibbing the wicks any lower than the 4-hour chart. That's just me personally with the way that I trade. But yeah, the weekly I'll do it. And then the daily is mostly where I focus on as far as PD arrays and key liquidity levels. So again, there's that daily bearish order block. And then I had the SIBI drawn there. And then I also had this one drawn here. That's a daily BISI. This is really all I need to trade on an intraday basis. So on a daily basis, what I'm looking at in the current day, trying to find setups to trade for that day, this is really all I need. And then if I need more refinement, or if I really want to take a sniper entry that has very minimal drawdown, then I'll start going lower and lower and lower. That short that I took, I actually took it on a 5-second chart. Going back to what I mentioned earlier about how this works on almost all of the time frames and financial instruments, this is all fractal. So what you can see on the daily, you can see on the 1 hour, you can see it on the 15, the 5, the 1, and you can also see it on the 15-second or the 5-second chart. But that short that I took was somewhere in the afternoon. So we swept that liquidity and then we came down and then I took my trade in here on the 5-second chart. So here we've got a high, low, higher high, lower low. So that makes this a breaker. Price came up into it. We displaced, pulled back, displaced, right? And then after that, kind of just like went higher, took out liquidity here, and then we just continued lower and lower and lower and we just kept going lower. That was pretty much it into the close. Same thing here. This is a 1-minute chart. So we have a 1 minute for value gap there. Key liquidity level rated, rejection back down towards that daily bearish order block high, came up, hit that SIBI, and then this performed just as it should, kept price down, and then we just did a market maker sell model all the way down. Same thing that you see here. You can see on a 5-second chart, all the PD arrays and market structure. You can see it on a daily chart. You can see it on a weekly chart. Price is fractal. But again, as long as you keep in mind that the higher time frames will dictate what the lower time frames do, that's all you need to keep yourself out of trouble. You can trade opposite to what the higher time frame is telling you, but those moves are usually short-lived. So let's say if the higher time frame is bearish, you can take a bullish trade, but it's pretty risky because you're trading opposite to what the higher time frame order flow is. So you can, but would highly advise against it, especially if you don't know how to read price, because those trades are going to be short-lived or super risky, and they usually don't run as quickly and as far as trades that you would be taking on the same direction as the higher time frame order flow. Okay, moving forward, I know I didn't show you how I do everything on the daily or the 4 or the 1 hour chart, even though I have it marked here, but what I did on the weekly chart, I just do on the daily and the 4 hour. I usually don't go any lower than that as far as like key levels to trade. I will mark out like a 15, 5, or 1, but that's really just for finding precise entries. Other than that, higher time frame PD arrays, overall order flow, market structure, all that stuff I do on the 1 hour up to the daily mostly, because again, that's really all I need. I do focus sometimes on the weekly PD arrays and key levels and liquidity, but more often than not, I can get away with just marking out the 1 to the daily. Okay, time frame alignment. This is something that a lot of people have trouble with because they'll be doing analysis on one time frame and then taking entries on another time frame that doesn't really align with the one that they did the analysis on. I'm going to show you a chart that will help you in getting this part of your top-down analysis and blending it with your entries and your executions down. That way you stay out of trouble. This is one of the many examples of a time frame alignment cheat sheet. As you can see, we've got higher time frame up at the very top, and then we go into monthly levels, weekly levels, daily levels, and then underneath each one of those, it'll tell you what structure or PD arrays to focus on, and then it also tells you which time frame to take your entries and exits on. If you're trading monthly levels, then you're going to focus on daily structure and PD arrays. And then if you're focusing on daily structure and PD arrays, you're going to take your entries on a 1 hour. If you're looking at a weekly level, you want to focus on the 4-hour structure and PD arrays, and then you're going to take your entries on a 15-minute. If you're focusing on the daily level or a daily level, then you're going to look at 1-hour structure and 1-hour PD arrays, and then you're going to take your entries on a 5-minute chart. This is the one that I mainly focus on because, again, I'm trying to get in there for a nice, decent intraday move. So I only focus on the daily, the 4-hour, the 1 hour, and then also I either take my entries on the 5-minute or a 1-minute, depending on how precise and how quick I want to get into the trade. We're going to go over an example of how I use the time frame alignment that I use on a daily basis. So the daily level, hourly structure and PD arrays, and then 5-minute entries. And then I'll also go over the 1-minute entries as well. My analysis after Tuesday was a trace back up into the upper portion of this daily fair value gap, and then a move back down into the short-term sell side here, and then also digging back into the daily buy side unbalance, sell side inefficiency. However, if we push the time forward and we look at how the daily chart played out, we can see that we have a close here above this daily buy side imbalance, sell side inefficiency. Now, because we didn't wick up and then come back down, now my attention is on us basically heading back up. Now, I'm looking for something like this, the next candle to manipulate down, and then we go up. On the next day, on Thursday, that's actually what happened here. We're looking at things on an hourly PD array or hourly structure, right? If we're looking at this. So daily level, we are back above that daily fair value gap. So now I'm anticipating bullish prices to the upside. We're going to focus on 1-hour structure or PD arrays, and then we're going to enter on a 5-minute or a 1-minute chart. So looking at this, after we have that daily bounce through, I can see that there is a 1-hour BISI here. Okay, so we've got 1-hour BISI there. We also have a 1-hour BISI here that we traded into as well. So everything is showing us that price is continuing to go higher. And then we have short-term buy side level here, which is also that daily SIBI. Over here is where I'm expecting price to end up. So if you go to a 1-hour chart, we have that short-term buy side here, and then we have short-term buy side here as well. And then we also have this 1-hour order block. So we're digging back into this BISI here, a touch back into the upper half of this daily buy side and balance sell side inefficiency. So if you're looking at this, we have a high resistance liquidity run, and that's evident by how choppy it is in here. It's not like quick like this move is here. Then we start having low resistance liquidity runs with large moves heading back up. So up, pullback, up, pullback, up, deep pullback or deep retracement back into the range, which is fine. Because we're bullish and we're anticipating price to come back up into this sell side and balance, buy side inefficiency, and we're coming back onto the top of a daily BISI here, we don't want price to come back down into the lower half because we're anticipating bullish prices. Now that we have price touching down deep here, we're anticipating price to go back up. What we could do is look for a setup on the 5-minute chart in this area that will give us a setup to go long. Here's a 5-minute chart. This looks like it's overnight session because this is Asia. Asia starts at 8 o'clock at night. But if you're looking at this, what is this? Oh, we have a 1-hour BISI here as well. So this 1-hour BISI was marked out from over here. Dip into the upper half of this BISI. We have this 1-hour BISI here. And because we didn't go down, up, and then continue down, we kind of went up, and then we are looking like we're holding the upper half of this BISI so far. We would think that price is going to go higher. So what you could do is enter long. So buy one, stop loss could be there. It's kind of tricky because this is overnight session So London will probably stop me out if it doesn't keep going higher. But if we play it, right, this is the target. Actually, no, this is the target up here. But if you play that out, oh, maybe we do. There you go. And that's just anticipating this 1 hour BISI to hold as an inversion fair value gap. So we have a break below, but then we're kind of working our way back above it. So when it pulls back, that's your entry. And then you target the upside. And then again, based on the daily level, we're anticipating this over here to hold. We did enter somewhere here, and then we went up. So that's, yeah, it's about 200 handles. Using the daily level, 1 hour structure PD arrays, and then basing our entry on the 5 minute, we were able to capture almost $4,000 profit on just this one trade on an overnight session. That's essentially how you would blend, in this case, the daily levels with the 1 hour PD array or 1 hour structure, and then using a 5 minute chart for entry. Realistically, you would look for a setup on the 5 minute chart. So I kind of just did it like without mapping it out. But if we're looking at this 1 hour BISI to hold as a inversion fair value gap, then you could map out PD arrays on the 5 minute chart that you could use to base that trade on. So for example, we have 5 minute inversion there. Instead of going up into this inversion fair value gap and going lower, we kind of just used the low of it as support, which was actually the low of Asia. And then we rallied higher, and then we started going into the 1 hour. But you could use this. This right here is a bullish order block. And then you could see how price goes outside of it, comes back in. Look at that precision right there. So candlesticks not closing outside the bottom half of it. And then the wicks were just digging into the low. And then as the candlesticks were printing the low, it just got higher and higher. So this took out just below the low of it. This one took out a little bit below the halfway point. And so did this one, but it was still higher than that. And then from there, we rallied out. And then we just continued higher. What I was saying earlier about using the 1 minute chart to get an even more precise entry, if I leave these open and then let's say we go down to a 1 minute chart, you'll be able to refine this even more. So we've got our 5 minute bullish order block there, 5 minute change state of delivery there. But on the 1 minute chart, you can see even more, right? So we have this right here. So this is a 1 minute inversion fair value gap because this is a SIBI here, but then price got right back above it here, and then we kind of just traded into it slightly at the top half, and then we started rallying. If you really wanted to get in at a much more precise entry, because we got in on the upper half of the 1 hour BISI, so we got in like somewhere up here. But if you were using the 5 minute or the 1 minute PD arrays, then you'd be able to get in as soon as down here, which is about a 22 handle difference. But not only are you able to refine your entries, you can also tighten your stop. When I entered on the upper half of the 1 hour SIBI, I had my stop below here. And then I also mentioned having my stop below Asia's low, which was over here, like around 8 o'clock. Looking at the difference, entry up in here, stop below there is 33 points. Stop below here is 57 points. If you were to price that out, you'd be risking $1,100 down to this low, which it still could have went down into, or at the very least, $660 if you had your stop right below there, which is where I had my stop. But if you were entering on the 1 minute chart, anticipating this 5 minute bullish order block to hold and the 5 minute change state delivery, then you would have been able to get in somewhere here and then put your stop below here. If we were to go back to selecting a bar, I mean, even if I just entered on the inversion fair value gap, anticipating the low of the BISI to hold, I could have entered here, had my stop there at the low of the inversion fair value gap, and then we hit play. I mean, even if you had it here at that swing low, that's still only $500, but I would probably have mine here. Just going off of the 1 hour BISI and the inversion fair value gap, and then that 5-minute bullish order block that we marked out earlier, I would be perfectly fine with having my stop here. And then we could just hit play, right? And then look at how far that goes. That's about $200-300 extra from where we entered over here, with a much tighter stop as well. So you got a little bit more profit because you entered sooner, and then you also had a tighter stop. Stop there, targeting that there. That is a 16R trade. I personally don't focus on R multiples. I kind of just go off structure and all that. But if you are someone that focuses on R trades, that's a 16R trade, as opposed to, you know, entering at about here and then having your stop there. That is a 7R trade there. If you had your stop underneath Asia's low, that's only a 3R trade. All right, so next is the 20, 40, and 60-day IPDA look back. Now, we did talk about IPDA before and the sequence of price and how it moves. The consolidation, expansion, reversals, retracements, all of that stuff. However, there's also a concept that IPDA considers, which is called the look back period. And we focus on the past 20, 40, and 60 days. What that is it helps you with looking at key liquidity levels based on what has already happened in the past. So this is the daily chart, and this is showing you the past 20 days, the past 40 days, and the past 60 days. If I am anticipating daily bearish order block to hold and price to continue back down, where is price more than likely going to go next? It's either going to go for any one of these lows here. So either this one, or this one, or this one, or we could just go off of the IPDA level. So in the past 20 days, the equilibrium is here. So I could go off of these, or I can go off of this, which is the halfway point of the past 20 days range. And if we do get a breakdown, right, and we start trading down, then the next key level would be the 20-day low, which is over here. So if price does continue to keep going, and, you know, let's say we chop around, whatever, and then price gives us more clues that we're probably going to continue going lower, then we would focus on the low. And then past that, we would focus on the 40-day equilibrium, which is this right here. 40-day equilibrium would be there, and so on and so forth. And this changes after each day as well. It's a way for you to interpret where we are in terms of premium and discount. For example, prices in the upper half of all three, then you know that you're in a premium compared to the past 20, 40, or 60 days. So if we start pressing play here, you'll see how the boxes move, right? So like here, we tapped into the equilibrium of the 20, we tapped into the equilibrium of the 40, and then we also tapped into the equilibrium of the 60-day, and then we started heading back up. So there, price is breaking down even more. So now we're starting to, oh, there it goes. So we're starting to go back up. You can see that the 60, 40, and 20-day look back period is now the same. So if price is starting to fall and come back down, this is going to be a key area for liquidity. So if we keep going, playing it lower, oh, there you go. So see how we went back up into premium, and then we started coming back down, and we took out the equilibrium of 40, 60, and then we just took out the equilibrium of the 20-day. Now, looking at this, where do you think is the more likely target to hit next? It's probably going to be down in here, deeper into discount. We have this low here, so this is sell side, and then we also have this daily volume imbalance. So these are targets to the downside. On this move up, we have a fair value gap here, we have a daily fair value gap here. If I just remove this, you can see how price is respecting the IPDA raise on this daily chart. So we have a BISI here, price comes down, we close below it, price comes up into it twice. Now we know that it's inverting. Our targets, or our anticipation for where price is going to go now, is likely to be to the downside. Where could it possibly go next? It could go to this little daily volume and daily fair value gap there. It could go to this daily volume imbalance there, or it could go to this sell side. If we're looking at IPDA, or if we're incorporating IPDA into our targets and we press play. Oh, so we are going back. So after there, we closed above it, right? So now maybe we're not going to go down, right? We're going to go up still. So press play. Yep. So see how it's holding the low of this fair value gap. We tapped the lower fair value gap, but we didn't even close inside of it. We didn't even close outside the bottom of this one. So now we know that price is more than likely going to go higher. Oh, well, this is kind of like when it was chopping, but yeah, because this is just a large range consolidation. Oh, there you go. So we took out that sell side, and then now we're heading back up. There you go. See how IPDA changes as price moves? These are all key liquidity levels, key areas for you to keep in mind as we start trading into the future. And, you know, obviously as the days continue, these are going to change after each day, but it won't change all that much. I did want to touch on that real quick because that is something that you can use as far as your top-down analysis, right? It's just higher time frame, look back periods to see where the equilibrium or the highs and lows of the past 20, 40, and 60 days are, because that's what IPDA is essentially going to use whenever it's booking price either to the upside or the downside. If, let's say there's a bullish fair value gap that rests on the 20-day equilibrium, and then we pull back onto that 20-day equilibrium and that fair value gap, and then we start to see that, you know, let's say the candlestick is wicking out the bottom of it, but then the candlestick isn't closing below the halfway point of that fair value gap, then you know that IPDA is likely going to use that fair value gap plus the 20-day look back equilibrium as a springboard or a trampoline to push price higher. Incorporate that with your top-down analysis, your time frame alignment, and keeping an eye on key levels. I'm sure it will help increase your trading accuracy and your win rate. The last point here is if then, if when statements. We kind of have been talking about it throughout the video already. At the beginning of the video, I said that midweek, I was expecting price to wick up and then come down to take out the short-term sell-side liquidity. That analysis that I gave was actually on Tuesday. I didn't even know about this candle yet. So my interpretation or my anticipation was for the daily candle to come up and wick, maybe come out the top of this daily BISI and then come back down and close either in the lower half or the lower 3/4 of this BISI, because I wanted it to wick up, come back down, and then the next day wick very shallow and then dump down into my target. However, because this daily candle didn't do that and we closed above this fair value gap, then we know that price is more than likely going to continue going higher. So the next day, we know to look for a wick down into the top half of it, preferably not the bottom half of it, and then look for a setup into the upside. Because what I was originally anticipating didn't happen, which was if this candle wicks up, comes back down, then we know that the next candle is more than likely going to be bearish. But because it didn't do that, now I'm switching back to bullish. So this here is what we're focusing on right now. This is the lower time frames price action based on this daily candle. So this over here is the candlestick that closed outside the top of that BISI. So the next daily candle, we would anticipate a wick forming in here, which is what it did here. It kind of just chopped around first, but overall, all this price action in this area, right, in this area here, was just forming the wick. And then when 1 o'clock came around on Thursday, that is what created the candle body. So that was our bullish move to the upside. And then we pulled back deep into this fair value gap there. Look at that. Nice, clean touch into that fair value gap on the 15-minute chart. And we went higher. If we were looking at this on a 1-minute chart, I would really be focusing on this fair value gap there. So, I mean, look at that as well. So we have our daily level. We know what the daily candle is more than likely going to do for this day. Kind of just open up, wick down, and then expand higher. So if we were looking at it on a 1-hour chart, with that in mind, you could focus on this one, you could focus on that one. Again, we're looking at time frame alignment, daily level, 1-hour structure or PD arrays, right? You could focus on that, or you could focus on, hell, even just this volume imbalance there. I personally wouldn't, just because the difference between the 6 o'clock open and the prior day's close, there's just too much room for price to consolidate in that level. It's so small if you're looking for PD arrays on the hourly at least. So yeah, I would definitely focus on this or focus on that one. This would be an inversion for value gap on the 1 hour. Price comes back into it. It does trade all the way down, but it doesn't take out that swing low. Then we have price just open up and engulf everything back here. Closes above this inversion for value gap. So now you know a tap in there would be your entry to go higher. Stop would go below it or at the swing low there or there. And then if price, you know, look at that. 1 hour for value gap here. All right. Select bar. If we go here, right? So we have a 1 hour BISI here, right? Stop down into a 5-minute chart, because now we could execute off this fair value gap if we wanted to. See if it gives us an entry. Oh, right there. Yep. So 5-minute entry or 5-minute chart using 1 hour for value gap, 1 hour PD raise with our daily levels as well, right? You could probably use that as a 5-minute inversion for value gap. We would enter there, stop loss at the low of the fair value gap, or you could do it here, or you could do it at that body, or 50% of the wick, or you could do 50% of the BISI since we already tapped into it. So if you were bullish and you see a 5-minute candle tap into the halfway point of a 1 hour fair value gap and then quickly reject and go higher, I would probably just go off of that. Keep your stop loss small. Or if you wanted to give an even more precise entry, right, you could have entered in this 1 hour, 1 minute inversion for value gap, stop there. See how that plays out. Oh, okay, so it did stop us out. But if you were watching this still, right? Let's say you entered there, stop there. See how that trades. Oh, there you go. So now we're back in the green. Didn't go back to the halfway point of that fair value gap there. And then it's also key to mention that this stop run down took out that swing low. And then we also dug into this manipulation leg down as well, because this is a bullish breaker. Because you have low, high, lower low, higher high, so we pull back onto it. This is a 1 minute chart, so technically this is like a 2 minute bullish breaker block, right? I mean, look at that precision. If you were just looking at that, we whipped down into it, but the candle bodies didn't close below the halfway point of it. So that's clues as to where price is going next. And then you could, hell, even get in on that right there. So you've got an inversion fair value gap on the 1 minute there. Kind of easy because we already know what price has done, but I'm just showing you how you could interpret these moves and how you could blend your time frame alignment to pinpoint your entries and pinpoint your stop loss, so that way you're minimizing your risk and maximizing your profit potential. Right? There you go. And then it takes off. these red lines are just key liquidity levels for the 1 hour candlestick. So from here, this is 10 o'clock to here, that's 11. So that means this is 9 o'clock. So 9 to 10 o'clock, the key liquidity level is this for buy side. And then from 8 to 9, key liquidity level for this period is buy side over here at 29,603. And because we're already basing out here, based on that 1 hour for valley gap that I deleted, and all of this that I highlighted here, now our targets are to the upside. So this is showing you targets that you could shoot for. So we cleared out the 10 o'clock candles liquidity. We cleared out we cleared out the buy side from 9 to 10. We cleared out key buy side from 10 to 11, right? So that's why it's no longer a red line, but now we have sell side down here. And then as we continue to trade, it's just going to mark out liquidity levels as it goes along, right? So there's the start of the 1 a.m. hourly candle. So now we have key short-term sell side here. We have buy side here, which it just took. Right? It's probably going to come back down into the range. Yep, there you go. Swept that short-term sell side because we took out this buy side here. So now premium back into discount of the range. Where does it go from there? Oh, it goes lower into the range. But yeah, you get the point. That concludes this video on top-down analysis, why it matters. We talked about the weekly chart, daily chart, 4-hour chart, the 1 hour chart. We talked about time frame alignment, how you could use different time frames. We talked about the 20, 40, and 60-day IPDA look back and how you could use that in conjunction with your top-down analysis as far as targets and key levels to keep in mind. And then we talked about if then, if when statements and how, based on what you're seeing on the chart, you can determine what is more than likely going to happen next. But that is it for this episode. Hopefully it helps you with your trading. If you have any questions or you need me to clarify on something, by all means, put it in the chat. But that is it for me. I'll see you in the next video. Bye, everyone.